What's up, guys? The economy is doing its best impression of a roller coaster. Steady one moment, throwing in a few twists the next. Watch your hair and your neck. If you're wondering what all this means for the real estate market, grab your popcorn or your calculator because it's time for a quick tour through inflation, stock blips, crypto climbs, and spending splurges. Here's what's happening in the economy and how it could make home buying and selling a bit more interesting. Here's the latest economic news and what it could mean for the real estate market. Number one, inflation and Federal Reserve interest rate outlook. October's inflation rate was steady, which could signal that the Feds may cut interest rates in December. For real estate, lower interest rates could ease mortgage costs slightly, making homeownership a bit more accessible. However, there's uncertainty about future cuts, which means buyers might still face some fluctuation in mortgage rates. And if you watched previous videos of mine as well, you'll know that once the interest rates come down, all the buyers go into the market. What's that going to do to home prices? Number two, stock market stability. Stock markets showed minimal changes with slight gains in the Dow and S&P, but a small dip in the NASDAQ. This stability is good news as large shifts can impact consumer confidence. When people feel secure about their investments, they're often more willing to make significant purchases like homes. Number three, Bitcoin surge. You guys ever notice how I lean in when I give you like stats? It's so exciting. I don't know. It's just like a thing. Bitcoin's surge and market sentiment. Bitcoin hit a new high. Saw that. Largely due to high-profile government appointments impacting cryptocurrency positively. This surge is noteworthy because people with gains from assets like cryptocurrency may see opportunities to invest in real estate, often as a way to diversify their portfolio with something more stable than crypto. Number four, corporate earnings. Earnings reported from companies like Cisco, Amazon, and others have been mixed. Some saw gains while others faced declines. Positive earnings can strengthen the economy overall, while mixed results may remind potential home buyers and sellers to keep a close watch on economic indicators that could affect their purchasing power. Number five, economic growth and consumer spending. You guys are spending that money. The U.S. economy grew at 2.8% in the last quarter, with consumer spending climbing at its fastest rate, you guys, since early 2023. However, business investments slowed slightly and personal savings rates dropped. For real estate, high consumer spending is a positive sign as it shows people are still active in the market. But with lower personal savings, some buyers might feel the pinch when it comes to down payments or emergency funds needed for home purchases. What's the conclusion? In short, the economy is a bit like that unpredictable friend who's mostly reliable but occasionally pulls a wild card. We all have those. Won't mention any names on my side. No big deal. Inflation and interest rates look like they're coming down, which is good news for mortgage hunters. Consumers are still spending, which is promising, but mixed corporate earnings and shrinking savings may make some buyers think twice. Real estate still stands strong as a go-to investment, a place to park wealth while the rest of the market figures itself out. So if you're thinking about making a move, now might be the perfect time to get a front row seat in this thrilling economic show. Yes!